Okay, thanks for taking the time to join us today at the Osprey Strategic Overview. What I wanted to communicate today is how to help find lows in the market, investable lows, and then how to use that. So one of the things that I try to do when I'm looking at the market is I really want to be in close to the lows, and other people are much more comfortable being in well after that. Every again, there's no one way to make money in the market. What I'll communicate today is how I try to use the information coming out of the market technically to help me find lows, and hopefully that will help you understand the process of using meaningful lows in the market, where to get in, and then I'll expand on more about how we use that starting point to make money in the market. And hopefully, as I work through the presentation, that'll give you a chance to think about some different things and then put those in the chat box as questions, and I'll try to answer those at the end. So with that, let's get going. So just a little bit of background about me. If you don't know me, I'm Greg Schnell. I've been writing over at Stock Charts since 2011 on their website. I wrote the book Stock Charts for Dummies with Lisa Epstein, and all of the background I've got has been learned in the market. I've managed my own business here for multiple years, but probably the biggest, most rewarding part of my investing career was when I got my CMT, and not just to have the designation, but to actually use it every day. And so one of the things you'll find that when I approach the market, I'm using technical indicators. I don't look at fundamentals like earnings and that kind of thing. As you'll notice, there was no change in the earnings to mark the most recent low in the market. And we probably will never find a low looking at the fundamentals. We'll find a low when the market participants are starting to buy the market. That's how a market low is formed. So with that, one of the key points that I think is a big deal is when to buy. And so as an example, if you wanted to wait for 4 weeks for the market to kind of feel safe, I'll give you an example that in July, we had the market breakout roughly July the 17th, and the market topped out roughly August the 17th. So after a nice 4-week run, the market was up nicely. And most people, literally, I had people saying, gee, Greg, market feels safe now. I want to get in now. And I'm literally thinking the exact opposite, that the market has been on a huge run, and you're probably better off to look to protect your positions than to add to them. So that's the big goal that I'm trying to change today, or help you with today, is how to enter the market earlier and how to get out earlier before the market takes away those profits. So when to buy, what to look for, what we want to buy, and when to sell. And I'm a big believer in how to protect from losses. So I'm pretty sure that by the end of this presentation, you'll be able to understand the idea of stair-stepping your portfolio higher. And again, you can do this if you've got a $10,000 portfolio, or if you're managing millions, putting a lot into each trade. So we have 7 main components of the website. And what I want to point out today is a brief summary overview of those, and then go into each one a little bit. And the idea behind that is to explain how we use this process that I undergo every week, and Dwight, who works with me on the website, how we put information in front of you that can help you make money. And part of it is what to buy, but the other part is when to buy. And I know there's I'll call it a commonly held belief with portfolio managers that you can't time the market. And I'm here to try and say that I think you want to think about that differently, given the information I'll present today. So we have lots of components on this website, and I think the biggest thing for you is to understand what we're trying to do and how that can help you make money in the market by being in at the right time, or involved in the market during the right times. So every week I do a video review of the 5 asset classes. So I go through a whole bunch of charts, well over 500 charts every week, to kind of come out with what is the market doing. And That information usually comes out on Saturday. We try to show where the market is strong or weak, and hopefully it's educational, usable, logical information. On the following day, usually on the Sunday, I'll put out a one-page summary of the asset classes with different perspectives across the market to try and help you see if the market is improving or not. And again, the idea behind the one-page summary is some people just have no time. And if you have no time, what you want to look at is the one-page summary, and it's literally just going to say, I like the market here, or I don't like the market here, with one sentence for each of the asset classes. And then I try to make a connection between what I call the strength indexes, the Schnell strength indexes, and the market. Then we have a chart list that you can always refer to regularly, and it allows you to kind of keep in touch with the main themes of the market right now. And the Osprey opportunities page, what we want to do on that is we have it set up so that you can go in and look at industry groups or areas of the market or themes of the market that are working. So one theme might be the energy crisis, and not just in fossil fuels, but in wind and solar, charging stations, all of that kind of stuff, taking a bigger, wider view than just one industry, and using that to try and help you find places in the market that look to be strategically improving. And one example might be ESG was a big theme, but the problem was none of the ESG charts have been going up for over a year. So it's been very difficult for people to make money in ESG. And one of the things we like to do is try and help you stay focused on the areas where the market is strong and is moving to. Oops. And so on the daily setups, what happens is we run scans every day. We try to show you 5 nice setups that are working. Now, one of the things we'll find on that daily setups page is when the market is correcting, these charts still might look good, but they're probably not going anywhere because the overall market's under pressure. But when the market starts to turn up, some of these charts literally pop to the upside, and I'll show you some examples of that just over the last week here. But the strength indexes are really set up to help us find that now moment, when to get involved in the market. And what we want to use for that information, again, is not fundamentals. We want to watch what investors are doing to hit the buy button. And it's not me or my mother or somebody else buying the market. It's when institutions with lots of money take the market from a -3% to a +3%. I think it was on Thursday, October 13th. And that means somebody stepped in and bought a lot. And they almost doubled the volume on the NASDAQ QQQ on that day. But they really came and they hit the buy button. And so we want to use information like that to help us. So we were all set up on the SSIs, the Schnell Strength Indexes, to be waiting for this move. And sure enough, on the Thursday, that move kicked in and it created a market bottom. And so then we start to ride out of that bottom. So with that, that kind of gives us a regular ongoing flow. And then a monthly conference call gives a chance to dialogue directly with me, where you can ask questions and get a big picture overview. Sometimes we don't get time to cover the world markets. So as an example, Brazil right now, or not Brazil, India is breaking out, or almost breaking out, to new all-time highs. That's quite different than the US market, where we're sitting at near 28% discount from the all-time high last November on the NASDAQ. So again, we're trying to show you where you can make money, and then trying to get the cycle of the market working in your favor. And don't forget that it's an opportunity to ask questions, much like it is today. So feel free to put your questions in that chat box. So with this, we have to have a strategy. Just move this up. We have to have a strategy overall for the market. You can't just jump in because it's Tuesday and jump out next week. We need some sort of a focus. And my big focus, I'm very risk adverse. I don't like to lose money. And I spent many, many years just kind of performing in line with the market. And that really wasn't working for me. Basically, I'd make the money and then I'd give it all back. So if you've been invested in Tesla and you rode it all the way up, it felt pretty good. And now all of a sudden it's down about 50% from its highs. And just losing all of that capital is really frustrating. So we want to try and protect the nest egg. That's pretty important. The service we try to provide here at Osprey is an affordable service that you can use to try and overlay your strategies in the market. And again, if you wanted to do all of the work I do for yourself, that's fine. The big purpose of my analysis is to try and narrow it down to that one-page summary, or the newsletter in total, or the weekly video, or all three. I have some people who read them all religiously. The goal is to try and help you make money in the market. It's nothing wider than that. It's literally just, if I'm going to do all of this research, I'll try to put it in a consumable form for you to try and get it down to figure it out. So we want to identify themes that come from the chart work, not fundamentals or stories. And one of my favorite lines is, I've never had a CEO tell me when to sell the stock. And that's so true. They'll always tell you, we've got some great opportunities coming up. Not that they don't have headwinds, just that they have some great opportunities. We want to be ready to buy near the lows when the backdrop improves and investors are starting to put their money to work, and we want to ride that trend with them. So if you can imagine 100 hot air balloons lifting off all at the same time as the sun rises, that's the same sort of idea. As the whole market wants to lift, we want to be on board with that. And then when the ride is over, we just want to exit, return to ground safely, and then go back up and do the cycle again. So when we try to create this perspective, again, as I mentioned, we had 7 main components of the website. Let's go into those in detail now. And then I'm going to put this all together at the end and show you how we actually use it this week and last week and the week before to try and make money in the market and give you the feel of how to roll through. So we're going to start with this weekly video. And what does that include? So I go through all 5 of the asset classes and I try to highlight areas of the market that are working, areas of the market that are not. So as an example, last week, transports didn't really participate in the rally, so that was a bit concerning. But we did see some moves in some of the commodity areas, some of the things like semiconductors and software stocks all started to move up nicely. Even though their charts hadn't changed a lot yet, they were still in downtrends. There was a lot of very good price action in them and they were starting to improve. So we want to use the price action on the charts to develop a narrative of the market strength, plus or minus, and we want to focus on the fast moving areas of the market. So I'm not really going to encourage you to be buying utilities or consumer staple stocks when the market's in a big uptrend. And when the market's not in a big uptrend, I usually move to cash, go play golf, help my kids with their houses, whatever. I don't really want to participate in down markets. I just want to watch the market for when it gives us this setup, and then we start to ride the next setup. And that in that way, we end up with this staircase approach where you make money, the stock starts to move up, you sell near the top, and then you continue this process up, and you end up with this staircase, with the goal being that all of the big moves down, you're just sitting in cash, waiting, and then turning back up. Most of baseball is made on singles and doubles. Home runs are a big part of the game, and we'll get those home runs, but you also have to go to the plate every time. We'll have a few strikeouts, but for the most part, we'll hit singles, doubles, triples. And, if we can get into the home run, you need a bigger truck for that. So we'll talk about that. Each week in the newsletter, I'm going to put a title on it. And the title on June 18th was Selling Exhaustion. Literally, the market is done going down and we want to start going up. And then to finish that, at the top, we're going to call it A Fuse is Lit. So this is at the front end of the video. This is saying exactly what we're going to do. It's at the top of the newsletter. This is the kind of thing we're looking for. And again, a fuse is lit means the market was, the ride up was done and it was going to start to have trouble here. And sure enough, I think we were down 20% from there. So that's the idea of the the video is to give you a big overarching view, a 1-hour video. And I would encourage you to, to just look through them and see if there's information there for you. Some people say they just want, charts to focus on really hard. I think it's more important to understand the overall market. And again, even if your stock is currently making money, earnings on every earnings call, you can have a stock drop a long way. And so I always want to make sure people understand that just because your company's making money quarter over quarter doesn't mean the stock will go up if the backdrop of the overall market is negative. So for a weekly newsletter, one of the things we're trying to talk about in that is that one-page summary. Are we trying to buy stocks here or not? And it's that bullish or bearish bias that I get from the chart review that I want to communicate to you. And as I review these industries and sectors, I'm explaining what's happening on the chart, what we're waiting for, the kind of signals that we'd look for to get long, so that you can get a feel for the market breaking down, the market starting to base, the market starting to work its way higher. And again, each week get a feel for what the market is doing. Roughly, we get about 8 rallies a year. Some are better than others. This year's been a tough one. But when we get these rallies, if we can get on board and make some money, so the March rally, the July rally, and hopefully now the October rally, we're going to start to make some money here. And it's these rallies that really give us big opportunities to go higher. So with that, when we cover off, I focus not just on technology, but also on commodity coverage. And some people would be like, well, why are you involved in commodities? First of all, I live in Calgary, which is a big oil and gas hub, but it's also close to the prairies and close to the mountains, where we have a lot of mining and minerals in the mountains, and we have a lot of grain farming and agriculture in the prairies. It really is a pretty big commodity hub. It's at the junction of the longest highway in Canada and the longest north-south road from Alaska to Mexico. So the junction of all of these things come together. There's also technology based here. Oil and gas companies actually had some of the largest computing power in North America. So Houston and Calgary actually had the biggest technology centers because of the amount of data they were processing with oil and gas. So I look across the spectrum. One of the things I like about the commodity charts is they move just as fast as technology and uptrends, but they are much more cyclical. So you need to get in and get out, and the ability to have a nice 10-year run like Microsoft, probably you're not going to ever find that in a commodity market. It's going to have big, wide swings. But based on the system that we use at the Osprey Strategic, I think you'll find that pretty helpful. And then we want to get right into the themes, which are some specific areas of opportunity when they start to improve. So this was the one-page summary from the newsletter that I wrote on Sunday. Basically, the week played out like a typical market low, but we definitely got the market pop we were looking for, and the market continues to roll higher. Big tech is going to report, but I'm expecting the markets to go higher. And then just a quick word on equities, currencies, bonds, commodities. Usually under currencies, you'll see some sort of comment about crypto. No real news from crypto, but continues to hold up. I think today cryptos are starting to move, and I like that as a risk-on indicator that things are starting to improve. And then a final conclusion is that the market did trade choppy. Is this the final low of the year? And it's too early to say, but I would just say that a lot of my trend lines suggest this might be true. And Europe might actually break their downtrends this week. I think that would be way more optimistic than most of the pessimists. So we're using the chart action to kind of explain that. And again, India could be breaking out to all-time highs. So each week in this newsletter, I'll give you a simple chart, a couple of sentences about the chart and what I'm looking for on it. This was August 22nd, and it's just shortly after we made the highs. And I'm saying, the chart closed below horizontal resistance, not really what we wanted to see. If the purple RS line at the top starts to break out, that's a positive signal, but it continued to underperform. And so the chart literally rolled down from there and fell 25%. So that's very clear what's going on here. The market's failing at the place where we expected it to fail, and it started to move down. In the newsletter itself, it basically said if the next leg of the bear market is starting, it's starting here. And that was written on August 22nd. So we have 7 main components of the website. As I mentioned, we're now the 2 primary ones, the big ones that are going to share information with you are the weekly video and newsletter. Now for the weekly chart list, what we do there is it's just a list of charts sitting there that you can refer to at any time. The link is in the newsletter, and you can go in and just say, what Greg was looking for, is that actually happening? And you can see that on Monday, Tuesday, or Wednesday. You don't have to wait for the weekend. So this chart list is varied. It has a whole bunch of stuff in it. So it's not just a bunch of bank stocks in a row or something like a portfolio manager might want to talk to you about. This is giving you a much broader perspective. And this is an example. It might have some of the indexes in it. It might have currencies or high yield bonds or European financials, and it changes as the market changes. So if all of a sudden software starts to rock, you'll be able to go in and look at the software chart and just see if it's starting to improve. Again, one of the pieces of feedback that is helpful is getting clients to talk about how their performance has been. And so it's one thing for me to have performance, but it's another thing for clients to have performance. And I thought this was a pretty meaningful sentence. Those 3 X's mean over 100% rate of return, and it was well over that. He stayed in a lot of energy stocks and really popped the whole lid off it. Now, I'm not proposing for a second that everybody will be able to get huge returns like that, but I would just say if you can build your staircase, year in, year out, I think you'll find you've had a pretty good year. And so the next thing is the Osprey opportunities. And what we want to do there is show these different themes that are starting to improve. So right now, as the market was correcting, we started to see oil and gas hold up. We started to see some software companies like Absolute Software hold up, and AEHR is another semiconductor stock that was looking pretty good. And so we start to see these. And as the market turns around, we want to watch those. And so these themes are there. So it might be oil and gas, or it might be copper and minerals. I think that's going to be one of the big growth areas for 2023. But we have to wait for the charts to confirm that. And then as these things start to take off, we want to ride them while they're in uptrends. These are not buy and hold strategies. I'm not looking for the next moonshot. I'm looking for singles, doubles, triples to try and make money. And if we get the odd home run, that's just great. But we have to be in to win, and we have to be out to not give back those gains like Tesla shareholders might have suffered this year. So again, the idea of the Osprey opportunities is for you to go and see a condensed chart list sorted in the strongest stocks first, so you can go in and find what you're looking for. And when the market is in a correction, we're still printing all of the information that we would normally communicate, but we're not saying buy at that point. We're just saying, here's where the market is at, what we're waiting for. When we get that sign, we'll let you know. So we're going to continue to have these Osprey opportunities files building, and then we want to start to get in as the uptrend continues. So with that, we also have kind of a more focused idea, and that is literally, here's 5 stocks each day that are setting up, and you can use those as good guides. So let's say all of a sudden the market's ready to turn up. These daily setups will all start to break out like one after the other. It literally is like popcorn popping in a movie theater, and you're starting to see all of these charts start to improve, and that gives you a clue that there's a real change in trend. So that's what we want to focus on. And each day these scans are run, and they're very high probability scans. And again, in a downtrend, I'm not expecting these charts to start breaking out against the trend. And if you just think of 100 football players running down the field, so the market is all going down, are you trying to find the only player going the other way? It doesn't make much sense. You want to try and go with the trend. So we're not trying to buy stocks when the market is in a downtrend. We're trying to wait for the turn so that the likelihood of our getting into the trade is better. And then when it starts to take off, you'll just find them all starting to run. So the strength indexes that I create, and we're going to cover those off right away here, are posted every day with the daily setups. And those strength indexes are helping us find those lows, those market lows, where we're going from selling the market to buying the market. And again, we're not going to find that on any fundamental chart or fundamental table. We're going to find it based on the price action of investors, where they're stepping in to push the stocks around. And when they start to add meaningfully to the stocks, the whole market starts to lift, and we want to be on board for that. So these daily scans include setups from patterns. And what does that mean? Well, when a market is in a downtrend, we're making lower highs and lower lows. And then what starts to happen as we make the low is we actually start to have charts that are making higher lows, but not higher highs yet. And so we end up with this wedge pattern. And finally, they start to break out to the upside. And I've got a chart on the next page here that's going to show us what we're looking for. But as we run these scans, we see these setups happening over and over and over. And these charts end up being wonderful clues to the market when they start to break out. So, and like I've just picked this name. I grabbed it this morning because it was one of the scans that was on our scan engine, roughly 7 days ago. And it's literally been up almost every day since then. It was a breakout around $17 with the instruction, all of a sudden the chart's got lots of volume. You want to watch this for a potential breakout to the upside. Well, it's gone from 17 to 23. That's a pretty nice move of 20% in 7 days. Will they all be this explosive? No, they won't. But this one was a really nice setup. And there's a whole bunch of other clues on this chart that I don't have time to get into today. But these daily scans are typically this situation where you're making higher lows, lower highs, and all of a sudden it changes to being higher highs, and the chart breaks out to the upside, and you get a big thrust. And that's what we want. When the market finally is holding these balloons down underwater, they pop to the upside, and we want to enjoy that initial surge especially, and then they may continue to run. What we don't want to do is have this where they run all the way up and run all the way down, and we hold them through this because they're great stocks. I don't doubt they're great stocks. That just doesn't mean investors are as committed as you are to holding them. And we really only want to own them when they're going up. And remember, August 19th was the high. Guess what? Even this great stock that had all this volume coming in ran up nicely for a month from July to August, and then rolled right back down. So we want to make sure that we're aware of the overall trend in the market. Again, you could have been invested in this, but you'd have sat through a swing from $19 to $13, a 20 or 30% swing. And you're just trying to hang on. And to me, that's just way too hard. What we would rather do is enjoy this nice run. And as the market starts to roll over at the top, then we're going to have a stop in, and it's going to let us out. And we'll wait for the chart to set back up again, and then we'll try to ride it again, or we'll move on to other names, whatever. We're not dedicated to a stock. We're trading whatever's working lately and trying to ride that as much as we can. So I think it's more important that when we are looking for a low, we still need to know what to do with that low, and why are we getting into the market here and now. And for me, the odds of winning are much better if we have a big, broad view and using that consensus change. So in the end of September, I'm saying I'm starting to get more bullish. Early October, I'm saying I'm getting very bullish here. I'm waiting for the market to turn. On that Thursday, October 13th, I'm literally buying stocks on that day because I finally start to see the price action where buyers are hitting the buy button aggressively. So now how do we find that? We're going to go to the strength indexes, and that's going to explain it. So when 80 to 90% of the industry groups are dropping, it's hard to make money. You're fighting an uptrend, and somebody will post a chart of something going up, and it's like, gee, I'm missing the market. No, the problem is you're trying to buy in a market that's going the wrong way, and you might have 1 or 2 or 3 days of uptrending stock in a down market, but the odds are you're swimming against the stream, and it's just very difficult. So you're trying to make money in a down market. I think most people that have held from the beginning of the year to now have been struggling, and an index is down 25% for the S&P 500. I had coffee with a friend yesterday who was in some, I'll use the words, foolish stocks with 5 to 10 year investing horizons. And he was down about 95% on his account because he was in margin and just got smoked by the whole move down. Um, I've tried to help him as much as I can. And he just didn't want to sell because he'd already lost money. And sure enough, it just kept going lower and lower and lower. I tried to say, at least get off margin. You just can't. The fear of losing is very difficult to overcome, and people selling a losing stock just doesn't make them feel good. So it's hard. It's been very difficult. And so then they like to buy after the market's turned up for 3 or 4 weeks. And what we saw in July, that was literally marking the top, and it rolled right back down. So the strength indexes are trying to help us find that low. And what do we want to look for there? We want to look for money rotating back into the market and starting to push stocks higher. So in the Osprey strategic model, this is the cornerstone piece. This is the piece that says, get in near the lows, try to ride it near the highs. Bulls aren't easy to ride either. I go to a couple of rodeos a year at the Calgary Stampede, and it's hard to ride a bull. It's hard to ride a bear market. But the concept of getting in near the lows so we know we're wrong quickly is as important as anything else. And then once we start to get everything riding up, our portfolio starts to lift and we can make some real money. So how do we use them? When they start to turn up, we start to buy. When they start to roll over, we take profits. We want to invest with this tailwind. So as the market is improving, we're making money, and we avoid the markets that are breaking down. So again, that's how we keep the stair-step model, where we rise up with the market, sell out, wait for the market while it corrects, and then we do the same thing again. And so instead of having this market oscillating sideways, we're going up and over, up and over, up and over. Okay, so what does that look like on a chart? This has been a particularly tough year, no doubt about it. Trying to trade in a down market and even trading downward in a down market is not easy. And I did a presentation in September, roughly September 13th or so, maybe 21st, of a person who was going after me, and they were making huge amounts of money per month shorting the market. And I'm thinking, wow, that's a pretty interesting statement to think that you'll be able to do that for very long. And what will be your clue to change? And we also have people who only want to be long the market when it's above the 200-day moving average. Well, the NASDAQ is 25% below the moving average on October 13th. So you're going to wait for an entire 25% move to get long the market. That's very difficult, because now you expect the market to go up 50% or another 25% above that after it's already made this huge move. So what do we want to do? We want to look for when the investors are trying to hit the buy button. And what we saw in March was it topped out and it rolled down. And in May, we started to make this base. And again, I measure this 3 different ways, and they'll have 3 different speeds of moving higher. So we just want to be aware that we're using 3 different calculations. And the idea is we want them all to start turning up. So they did, and they started to fail in here. This was only I'll say a 10% gain from low to high. And then the market struggled for a whole week, couldn't go anywhere, and then rolled back down. And so in June, we had this horrible low that everybody felt like it was going terribly. We made a low, a lower low, a lower low. And all of a sudden, we started to see people come in on options expiration day right after that and start to buy. And this was particularly difficult, even for me, because I kept trying to have my stops close and I kept getting stopped out. But what happened at that low, because the volatility is so high, and it's a lesson I learned right there too, that I'm going to have wider stops on the market. And so as this starts to run, you want to be involved. And this takes off to the upside and literally runs all the way up into August. And at the end of August, so it was really chop in June and early July. And then there was a 1-month run. And then we fell this huge amount. And so this was another difficult place for me. The market started to break out and turn back over. So my system immediately had buy and then sell right away. Again, we're in a bear market, very difficult to trade, but it's telling me that what was working is no longer working. All of a sudden, everything's trending back down, so we have to wait. Sure enough, at this low, we're starting to get clues. The market's getting more bullish. And what's an example of getting more bullish? Well, I scan for things like how many stocks are making moves of greater than 10% this week. And I'll get a number. Well, in September here, it was 50, 80. Down in here, it was 200 or 300. And then all of a sudden, it was almost 1,000 in early October. And then the market really started to soar after that. So you're thinking, okay, 1,000 stocks are making new moves up of greater than 5% or greater than 10%. They were really starting to change, even though the indexes were still trying to base down here. So we start to see some of the other data that I capture making the low, but finally my strength indexes start to move, and I like to look at them when they start to go above 25%. So that was the Thursday morning, October 13th. All of a sudden they were starting to break out and we wanted to be on board. So get in, sure enough, the next Friday whips down hard and the market pulls back, and that's a difficult spot. Again, this investing is hard work mentally and challenging. But we're seeing all the signs of things starting to improve. And now we've had a nice run with, I think, 6 of the last 7 days higher. It feels to me like the market wants to put money to work here and start to turn. Okay, and then lastly, we've got the monthly conference call that we go through, and that's just a chance, and that's coming up this week, at the end of this week. If you're interested, you could, if you signed up as a client, you could take a look at the conference calls. You can go back through all my newsletters, through all my videos. They're all available. I don't delete them after a week or something. They're all there. And so for the newsletter or for the monthly conference call, we'll have a theme. And in July, it was start to look at these commodities. We want to continue to watch them and see how they're working. And we do have some of the commodity stocks made a nice low in June, and they tried to work their way higher. Now we'd like to see them break out to new 3-month highs. Again, I think it's critical not just to try and find a buy point, but to have a strategy to win in an overall market. So whether the market's trending lower all year or trending higher all year, you still need a strategy for being involved in the market and understanding when the market is at risk. So what would happen if some major change in the world happens? China's economy falls apart and we have trouble. My charts will change and kick us out. Or conversely, they're all starting to turn up. Even Europe's charts are starting to turn up. My information on the US market is starting to turn up. So that tells us that we want to be involved. And when they start to weaken at the top, then we'll just take our money off the table and we'll step aside. And hopefully that gain, I think you'll find is pretty respectable. So you need to have a strategy protecting the nest egg. To me, if you just can keep your losses small, and that's still hard to do in this bear market, it's been hard to do. But your subscription service needs to be affordable. I think you'll learn a lot more using a big intermarket overview than somebody who's just telling you how to trade Tesla back and forth. I just don't think you can learn enough about how, when the market is trending higher, and I have great friends that are technicians, and they still tried to trade through bear markets. I just find it very difficult. So anyway, hopefully you'll find this easier to work with. The themes come from chart work. They don't come from fundamental stories. So I know Jim Cramer has the CEO on all the time. My main point with the CEO is he's never going to tell us when to sell the stock. And so as much as he's hopeful for the next round of whatever they've got coming down the pipe, that isn't telling us what investors are doing with their stock. And so you always want to be ready. But even when the market is ugly, and I'm sure November or October 13th wasn't a real big buy point for other people, it was a big buy point for me because of the way the data changed, and I share that with my clients. So again, as these clues come at you, you want to be thinking about that. So I call this system the plum system. And essentially, when the market starts to turn up, my strength indexes, we start to back up the truck at the stock exchange. And if the market rolls over like it did in September, we're only 1 week, we're not going to make any money. We're probably going to lose money and it's going to fly away. But if we can get onto the second or the third week of running, we're going to make a little bit of money and we're going to do okay. Now, if all of a sudden we get to the fourth week, we're going to start to make some real money with a big uptrend, probably outpacing most people's annual returns just in that 3 to 4 week period. And then if we get to 5 weeks or more, we're going to need a bigger truck before we back up and unload as the market rolls back down and we want to get out. So then we go back and we just wait, and we're sitting there with the music playing, we're playing golf, we're helping our kids with their houses, we're doing whatever. And then once the market starts to turn and burn higher, we repeat this process. So again, I like to call it the plum system, which is pick up, load, and make bank. Just take it from here to here. And we don't know how long it's going to last when we start to buy in. But if you don't have money at work in the market, you're not going to lose any, but you're not going to make any either. So we need to use some clues. And for me, making sure that I'm invested when the market is trying to thrust higher is a pretty critical component. So after each one of these, we're going to take our gains, we're going to continue to pile them up in the bank. And hopefully by the end of the year, that creates a profitable position. Most of the time, we're going to get to do this 8 times a year. This year, I think it's only been 6. But I think the problem that we've had this year is the rallies have been short and the bear market extensions have been long. So if you can make this system work this year, it's particularly meaningful when the market goes on a big run and we can just stay invested longer and longer and our truck gets bigger and bigger. So we try to make runs up and we try to make runs back empty and just wait. We don't want to be invested in stocks while the market is pulling back that 25% and giving back all of our gains. So I call it pick up, load, make bank. Now, what I want to show you this week, and it's just because I can this week, somebody asked me about, okay, Greg, do you share your results? So my account was up 5.9% after 1 week last week, and it was up 1% yesterday. It's up another 1% or so today, just real rough. So we're already up almost 8% in 2 weeks, and we're waiting for this to run. So let's just say we get out here and we're at whatever, 10, 12, 15, 20%. Put that money in the bank and make the cycle go again. Effective Friday, I was up 28% on the year. I'm not trying to brag. It's just somebody said, well, if you're not going to put your results out there, how do we know if the system works? So those are some numbers that I've been able to achieve. I don't use options. I don't trade on margin. I just own stocks and sell them. So hopefully that gives you an idea of what we want to do. So with that, I think you'll find that this is a plan rather than a whack-a-mole system where, oh, gee, this stock's up today and oh, gee, this stock's up tomorrow, regardless of what direction the overall market is going. We want to wait until the backdrop is there. We recently made this low. We're just coming out of it. There's still opportunities showing up, and the daily setups are popping new stocks each day. But we're going to get these buying opportunities a few times a year. So if you're on vacation for one of them, you just wait for the next one. And when the next one starts again, then you're going to get in near the lows and you're going to try and buy and ride it up. And again, when you're at a market low, the market's choppy. It's going up and down 2% each day, each way. And it's very difficult to have any comfort. Your portfolio swinging wildly. Or if you sit in cash and wait, you can do that. You can wait until the whole thing is above the 200-day moving average and wait for a big pullback, and then try to get involved once it's above the 200-day. That's a lot of people's strategy. And I fully can agree with that. If you want sleepless nights or nights full of sleep rather than sleepless nights, that's a good way to go. If you're willing to try and trade near these bottoms, again, there's a full 25% to be gained to make it just back to the 200-day moving average, if you have a system to help you find those bottoms. And I think I've tried to prove or display a system that works to find those bottoms each day. So this is a pretty serious offer. If for a 1 month trial, you can go in for $7 and have full access. You can see all my old newsletters, all of the videos, the daily setups, everything. You can see what's going on right here, right now. For less than $20 a week, you can have full access to the site. I really do think you need to ride a few cycles to understand when when the systems, the strength indexes are saying get in, and the truck starts to leave, and all of a sudden it starts to roll back. Okay, that's a problem. And it just keeps working its way higher, and you're able to hold all the way to the end, and then it curls back down. So I'll put that plum system in a short 3-minute video that we can send off to you. It's also in today's presentation, but as well, it's a simple concept of just trying to ride it when the market's helping you and trying to avoid the market when it's not. And I know that's not a big, long-term tax strategy holding thing, but if you think we know the future for 5 to 10 years out, I know friends who have lost 90% of their holdings trying to own 5 to 10 year stocks in a downtrend. So I think it's a pretty meaningful place. So with that, if you have questions, I'm going to open the chat room. Please feel free to put your questions in here and then talk about what you'd like to hear about, and hopefully I can help explain that to you. So, do upcoming earnings affect your decision to buy? And I would say I do not like holding through earnings periods. So if I had the choice, I would miss them. Unfortunately, the market low came in right as we're going into the earnings announcements this week. I think even the move in Amazon wasn't as bad as we might have thought. They're cutting jobs in their largest growth area. But I don't think the stock responded really, really bad. And so what I like to do is I like to watch what's been holding up, and then I try to put on my positions and then ride them in it. So at the lows, I'm thinking more like an institutional investor where I'm putting my money in and I'm going to let it move. And then as we start to ride up, we want to take it over. We want to stay on board. So let's just say that you don't want to go picking individual stocks. Well, then you could buy some ETFs, or you could buy the QQQs, or the whatever your choice of index is, the S&P 500. So you buy the SPY. You can do that just to start riding the trend. And then once the trend is starting to work in your favor, you can start to find individual stocks that you want to own, and maybe move out of the SPY and move into some of these names as they start to pop. Or, you can, what I did was I like to put all my money in when I'm getting my signal. And then I know it's rough, but once it starts to work, and again, all of a sudden, it feels okay to be involved in the market. I can tell you on the Friday after, when immediately we got in, like I was in within a couple of hours of the market open, and all of a sudden my stocks are starting to lose money. But you're near a market low, so you have to expect volatility. Anyway, so currently I have about 15 positions spread across 9 accounts. So that's just the way it's working for me. The percentage gains I gave you there were from my largest account, which is my investment account. So that just gives you an idea of how I work the system and why I think this system can work. Again, we're trying to hold for a period of time and then get out. We just don't know how long that period is, and we let the market tell us that back. So what is the maximum number of positions? I have friends that own 100 different ETFs. How are you going to outperform the market? I'd rather just own SPY or QQQ or XOP or something in the sectors that are working. I don't want to I don't want to be out of the market when the market is rising, and I don't want to be in the market when the market is falling. I can put stops under, let's say, oil and gas. Let's just say that that's trending higher. We saw Devon, and we saw a whole bunch of them, CNQ, all start to break out to new highs over the last couple of weeks. The Schlumberger and Halliburton all broke out. Let's just say that trend continues all the way to January. Well, what we can do is we can just keep moving up our stop or where we'd like to get out if they roll over. If they continue to go higher and the market rolls down, we don't have to sell those stocks because the market is rolling down. We can wait and see if they could outperform. It's harder. I'll give you full full acknowledgement. It's harder to hold when the overall market's going down and you're sitting in a stock going like this, trying to jerk its way higher. That's very difficult. But you know, there's nothing wrong with staying in something that's working. My point would be, don't start adding to something that's working as the market's rolling over. It's very difficult. So please stay away from trying to add late in a cycle. Like once all my strength indexes are at the top, please don't start adding there. Just wait for the next cycle. You're probably going to give enough back that you would have been better off waiting. The odds of being right, and sure, it might go for 8 or 10 weeks and you should have got in at week 5, but the model is designed to help you get in near the lows and lessen your risk profile. So getting in after everything's up 20%, there's not many institutions that want to add after stocks are up 20% in a month. They would rather wait for some sort of a pullback to a 50-day or a 100-day or a 200-day moving average to get back involved in a stock. So just try to think about it from, if you're moving whatever, a large amount of money, $100 million, do you want to invest after the market's run up 20%? Probably not. You probably want to wait for some sort of reset, and that's what the strength indexes will help you with. My maximum number of position sizes, again, 10 or 15. If I get to 20, I'm really pushing it. I would rather just have a smaller number, and if they work great. And so what would tell me that this current market setup is a bear market rally? Well, all of a sudden, we're going to start to see stocks going nowhere. All of my strength indexes are going to start rolling over. And again, they can flutter, but if they start making lower lows and lower highs, that just tells me that, again, if you think about what they're measuring the power of the overall market. If all of a sudden the power of the overall market is going flat to down, I just want to start to make sure my stops are tight and they start to kick me out. Somebody said, can you provide weights when you invest? And I would just say that on the Thursday, I moved from almost 100% cash to 95% invested. So I wanted to be invested near the lows. And if I was wrong, I was going to take a 4% loss across my portfolio. But again, the markets had just come down 28%, and I want to start looking to the upside. And I'm starting to see the market do everything I thought it should, with the percentage of stocks moving higher, like the 5% gains and the 10% gains really starting to accelerate. So that's a key point for me, is that, yes, I do try to move into the market all at once. Some people like to go in one at a time over a period of 2 or 3 weeks. Go ahead. I'm not trying to describe exactly how you do it. What I am saying is, for me, the market wants to go on an uptrend, and so I'd like to be involved. So by being involved last week, I was up 6% on the portfolio. Again, 1% yesterday, and probably another one today, just based on starting market action. So the portfolio starts to climb, and so all of a sudden it's whatever, let's say 8% in a couple of weeks. Well, if it rolled over right now, I'd probably lose 4% before I got out. So I'd only make 4% on this rally. But if it can keep going, pick a time frame through the November elections, maybe through the Fed meeting, past the Fed meeting, past the CPI reports in November, whatever. As we get out there, we'll start to figure out when we can do that. And so let me just check out some of the other questions. Okay. So when somebody said, can you provide weights when you invest and sell? So what I like to try and do, I never want one position to be more than 10% of my portfolio or my overall portfolio. So between all of the 9 accounts, so I might buy whatever, a stock heavier in one account, but as a percentage of my overall, I try not to make it higher than 10%. Will this presentation be available for viewing later? Absolutely. So we'll have it recorded for you. I think the most important thing, again, for $7, you can go in and you can try everything we have to offer. This presentation will be made available to current clients and anybody who attended or signed up for the webinar. But the idea that I want to help communicate here is, watch the cycles, and preferably, for $7, go in and watch the cycles. I'm trying to make hundreds of thousands of dollars here. I'm not worried about $7. The goal here is to get you on board for moves higher. And whatever the size of your portfolio, then you can start to make these steps. And as these steps start to work in your favor, you'll get a feel for just why it's so important to not have the big losses. And if you have to take a 4% hit, then do. But over time, you're going to end up having a portfolio climbing up and away, especially when we start to get back to a market in an uptrend. Then it'll help you find appropriate times to be invested. Okay, what is your view on the chemical fertilizer sector? You know, I own Nutrien even as late as last week. I bought it on the lows, and all of a sudden it moved down 7%, and so did Mosaic, and so did CF Industries. I looked across the corn, soybean, and wheat charts. They're all starting to break below the 50-day or near the 50-day moving average, and I'm thinking that doesn't make any sense to me, that the commodities are breaking down and all of a sudden all of these fertilizer stocks started to break. So I actually took a loss on Nutrien and just said, okay, I'm out. And I haven't gone back to look at the chart since. I don't care if I took the information I had on that day. Why is everything breaking down? And when a whole industry starts to move down 7%, I'm like, that's not supposed to happen. So there's something bigger going on. And so I just stepped aside. So that doesn't mean I don't like the sector. It just means for some reason the sector is breaking down. Price action tells me that. And so I'll move along to something going up. If the current rally continues, how long do you think it will run? Until December, January? I really do not know. If all of the moves the Fed is going to make for the next few months are priced in already, so we already know a 75 and a 50 or whatever, then the market can run. If all of a sudden the Fed has to move 100 and has to move 100 again, the market's not going to be happy. But we're starting to see the TLT. There was a nice bounce on it today. The US dollar is trying to roll over. So all of those things from my macro analysis look good. Hopefully that helps answer the question. I never know how long the run is. My big hope is obviously that if it goes for 5, 6, 7, 8 weeks, we can start to make 20 or 30% in that period. And then you just take that money off the table and send the truck back to the beginning of the loop and wait for the next rally to start again. Do I just trade ETFs or just stocks? So I think the easiest way to think about this is the system is designed to look broader. The SPY is for large caps. So my system also looks for small cap and mid cap stocks starting to turn up. In metals and minings, there's not very many large caps, but I think that's one of the biggest opportunity areas. So I think it will help you trade the SPY and the QQQ. It'll help you. You know, if everything's rising, those are going to go up. So my system should work well with the SPY and the QQQ. My main point is, yes, feel free to try and overlay the QQQ. And again, on the SSI chart that I showed earlier, the NASDAQ 100 and the S&P are on the top of that chart. That's what I'm looking at every day. And part of my weekly newsletter is a daily, weekly, 60-minute view of those charts, and then, being aware of the macro trend. So yes, I do trade ETFs. I currently own some financial ETF because I like the looks of JP Morgan and the bank stocks. They look like they could accelerate higher from here. I own some energy ETFs. I own individual names in both of those areas as well. And I own some metals and mining. Do you send buy-sell alerts as you trade? No, I do not. And I trade mostly the Canadian market, but all of my analysis work is done on the US side. So I'm not front-running my clients, and I'm not saying, oh, I'm buying Microsoft this morning, you should too. I don't do any of that. So we will give you the daily setup. So I'll just tell you that I like the market. It's bullish. My strength indexes are saying go to buy. And just because they go to buy I'm not telling you what to do, but I'm telling you that I am going buying when I say the strength indexes are buying. So how do you place stop losses? So for the most part, my stop losses are if the market doesn't do what I expect, then I'm out. When I start to see overall market weakness starting to form, I'm out. In the case of the September, it literally went up 4 days in a row. And on the last day, I was a buyer. And on Monday, it crashed, I think, 6% or something. So I ended up getting hammered. Probably the worst trade I've taken in 3 or 4 years on that one day. But I would just say that that's probably the sudden return on that one, where it was literally came into the morning and the market was crashing and really didn't turn around. And so I've got another one. Greg, your year-to-date return, did you have any short positions or long only and cash? I was long only, and I was mostly long only energy all the way through the first part of January, February, March. And so obviously I had nice returns there. I went to a conference in April for the CMT Association in Washington. A lot of my friends were still long energy, and I'm like, my charts are starting to crack. So I was starting to sell my energy in April, and everybody's like, we're going to 200. And I'm like, well, okay, but my charts are telling me different. So I don't trade short. I actually tried short positions for like 2 days and I lost money, and I just can't trade short. I am a long only or cash. I make way more money trying to be long only than I ever do trying to short, because it's that vicious reversal like Thursday morning. A 6% change in one day to the downside on a short position. That's just so hard for me. I can't trade through that. A lot of times it gaps overnight and I'm just done. Risk management stops are based on an ETR multiple. Yes. And I want to be in close to the lows for, so like on that Thursday, unless the market made a lower low, I'm probably holding in. I'm trying to be more of an institutional holder there, and that it's more difficult for me to get on board. And in June, I got washed out because I tried to place my stops too close. And I just said, you know what? I need to decide that if the market isn't going to make new lows, I'm probably okay. And so that on this low, that was the way I took it, was we're down 28%. The market is trying to turn higher here. I'm going to have to give it room to wiggle because the VIX was over 30. Okay, so I find the squiggle in your 3 indicator when it's bottoming and maybe turning up. The 3 lines don't cross 25 at the same time. So later I hear you say, it would be nice to have a note on Dwight's chart saying Greg took position today. Okay, I will try to do that more with my Schnell Strength Index comments at the top. That, yeah, it's funny because some people say you shouldn't do that. But the big thing I would just say is, if one of them is starting to go above 25 and I've been looking for a bottom and they're starting to move, I'm definitely looking for charts that are setting up and breaking out. And that's the big message here, is I'm looking for charts setting up and breaking out. So if I just opened, well, let me go grab something here. Let me just do one thing. Okay, so I'm going to go get my view show favorites bar. And the idea here, again, I'm not trying to get you to follow my trades. I'm just getting you to have an idea of what I'm doing. So if I go pick whatever, here's a stock, Athabasca Oil and Gas. And so this stock is starting to push up. So I bought it on that Thursday as it broke out and it made a outside bar. And this arrow is my buying level, and this up arrow is the day I bought it. And you can see I put up with a move all the way back down to the bottom of the range, and now it's starting to work. If I go take whatever, Royal Bank. So I bought it on that same day. So I bought it here, and it's been choppy. Like I had a big gain, I gave it all back. I'm back to where I bought it. Then it starts to turn up. If I go to Tech Resources, so I bought it on this candle. Sure enough, it had already started to break out. So I'm buying the breakout. It goes chop for 6 days, starts to move, has one nice day, pulls back for 2 days. Like, it's still not easy. It's just the program starts to work as a group when all of the charts are starting to trend higher. So here's National Bank, another Canadian bank. I bought it on that same day, and it's been a little easier, right? It's sloped all the way up. I bought Microsoft. So we have a Canadian way to buy Microsoft. So I bought it on that candle right at the top. Next day, takes it down, but it's been wandering its way higher. And so whatever, I'm in it 1738 and 1764, and it's at 18, so I'm up a buck. It's working its way higher. But again, what's happening, my PPO trend line was starting to break. I got the buy signal pretty much as the PPO made its big base. And for people who know me, they'll have seen this movie so many times, but it's, you have a big base in your PPO, then it makes a shallow return and a small one, and then goes pop. And that's exactly what you're trying to buy. So when we got that reversal on the Thursday, and again, look how far it moved before I could even put a buy in. Within a couple of hours, and then it just stayed sideways for the rest of the day, didn't make any more gains. So you can just tell they know exactly when the volume is coming into the market, and literally we did nothing after that. So all of these, again, there's no magic here. I'm just trying to get in when the market is making its low, and then I want to go broadly picking across the market. I don't, here's lithium. So I bought it on that day, and it's gently climbed out of the hole. It's a pretty nice mover, actually, 31 to 35. But again, I think lithium is going to be one of those stocks that really has to run. Tech resources, I've got a couple of different positions in this one, and I mentioned it on the conference call or on the newsletter for clients this week. But I sat through literally 6 days of nothing on this thing. It finally made a move on Thursday, and then it's pulled back or Friday and pulled back for a couple of days. So is it hard? Yeah, absolutely, it's hard. I would just say that overall the market's trying to thrust higher, and I'm sitting here with the market up 2% today, and this thing's down a percent. Well, that's just the way it goes. So that's why I would suggest buying a basket, not trying to pick your one stock to win kind of thing. Okay, with that, we're getting on in time. If there's anything we can do to help you, feel free to send me an email at info@ospreystrategic.org. So info@ospreystrategic.org. But for $7, I just don't think I can do it at a lower cost, and I don't think I can educate or help you understand the rhythm of the market and the SSIs without you following it each day to just kind of get a feel for what's going on. So with that, thank you for taking the time to join me. Hopefully you've identified some structure to the market today where we can start to see lows starting to form. And as the market breaks out to the upside, you get the opportunity to participate. And then how those signals sell off at the end of August and start to roll over, then we want to get back out or just have our stops tight. So if they get hit, we're thrown out. But you need to let the market work. And again, this is hard work, right? I bought up here and I sat through 5 days of losses before it finally started to run. So with that, thank you for taking the time to join me. Hopefully, I've given you some things to think about. And again, the goal here is to try and help you think more strategically about the market. And again, our logo is designed to go down, pick up the stocks at the right time, and then just try to ride them as much as you can. Thanks a lot. Have a great day. Bye-bye.